What's up, guys? It's May 14th, 2025. Looks like we had a trading range day today. We haven't had one of those. We haven't had one like this in a while. Hope you guys did all right. Want to give a quick shout out to all subscribers and members. Thank you guys. I always appreciate you guys subscribing and joining the membership. If you guys are looking for more in-depth videos about leg 1, leg 2's gaps and how traders are getting trapped, hit the join button next to my name down below right here where it says price action breakdowns. Hit join and you can join the membership. I'm going to make today a little bit quicker because I'm having mic issues. I don't know if they're static. I put a bunch of filters in on OBS to dampen it. But yeah, that's why it's kind of late. I've been fiddling with the mic all day. I'm probably going to have to pick one up this weekend. This is a daily chart. Yesterday I was talking about how we have 3 legs up. Leg 1, a couple ways to count this. Leg 1, pull back leg 2, pull back leg 3. Or you could say this is a trading range, and we're breaking out of that trading range. Leg 1, pull back leg 2, pull back leg 3. We're getting bad follow through. Today was a bull bar, but it's bad follow through. We're right around the swing high. This is kind of where the bear started to break down, and we're far away from the EMA. The 15-minute chart, it looks tough. Yes, this is yesterday's, or 2 days ago, we had a gap up. Sideways price action rallied. Yesterday we had that leg 2. Started to go into trading range by the end of the day. Yesterday ended in a bear bar closing below the EMA. Puts us officially in a trading range because that's a bear channel down. Today we had a gap up testing the high, sold off, and then we went sideways. A delayed second leg with really bad follow through. You can see the tail here. Ended up being a 2-legged rally, leg 1, pull back leg 2. Second leg traps are very common in trading ranges. So, a day like I didn't actually trade today. I thought this was gonna happen yesterday, so I didn't trade much. But yeah, this is what I was looking for because this is where I get slaughtered. So I think it's important to kind of understand when these days are coming. Why did I think there's gonna be a tight trading range coming up? It's the daily chart. Yeah, looks like the overnight session is selling off. I gotta renew my TradingView subscription. That's why I'm doing it like this. There's a gap here, and in trading ranges, gaps get closed. So the bears are going to close this gap. If we're in a trading range, bears are going to want to close this gap. If we're in a trend, bulls are going to keep this gap open. Last time we had a strong bull bar, it was followed up by a bear bar. This time we had a strong bull bar right here and had follow through. But then the follow through is bad. Looks like the overnight session is starting to sell off, so it'll be interesting to see what happens. I'm going to focus a little bit more on the trades to take today because some members in the Discord were asking me to talk about the trades. And yeah, so let's just get into it. It's a tight trading range, so it's a tough day for breakout traders. Gap up, bar 1, good bull bar testing yesterday's swing around 75. Bulls end up not being able to make a new high, and it sells off. Bar 2. Bad follow through for the bulls, good for the bears, and then they get bar 3, good for the bears. Bar 4, another bear bar closing on slow, but it has a tail. And now bears have closed the gap, and they did it real fast. So now we have a gap up, we have a big up, and we have a big down. Not necessarily good because that could put the market to a trading range. And look what happened for about an hour almost. I was counting these legs as they were going on, so as they were printing, and it's a hard count. As it's before bar 19, right? 19? Was that? Yeah, before bar 19. I'm going to delete that. This is what the market looked like. We could put it right around here. I was like, wow, this is actually tough. It's tough because trading ranges are known for delayed second legs. We have a gap up and we rally down. And we also know we get deep pullbacks in trading ranges. And now we're getting bad follow through. So I was like, I wonder if bulls are going to get a rally. Then I started to see these tails. I was like, I wonder if bears are going to get a second leg down here. It became difficult because bears had wedge bottoms and bulls had wedge tops. So counting legs in a trading range, you got to count the tails. Here you can count like leg 1, this is like leg 3, pull back. Let me restart that. This is leg 1, pull back leg 2, pull back leg 3. But in a trading range, you got to be cognizant of the tails. So you could say leg 1 started right around the 4 low or the 6 low. Rallied, sold off. There's a rally within the bar 8 for the bulls because there's a tail right here, but there's a sell off. There's a bear leg down. I'm struggling today. It's a hot day. I love these ads. I gotta update this. Leg 1, pull back leg 2, pull back leg 3. That's a wedge bottom, and then that rallies for 2 legs. Leg 1, pull back leg 2, pull back leg 3. Bar 12 is an inside bar under the EMA. So that's not the best thing for the bulls because an inside bar under the EMA could have sellers above it. Look at 13. It rallies, then it sells off. So bulls are getting filled thinking they're going to get a second leg, a reversal, and it traps them 14, 15. Traders are willing to average down in trading ranges. So what I mean by that is they're going to buy here, scalp out on 16 and 17. They get out, break even on their first entry, and they make money on their second entry. When bulls get out around 17, this is going to cause selling pressure. Bears see this as 3 attempts up. So leg 1, pull back leg 2, pull back leg 3. That's a wedge top right around resistance. The bar 3 breakdown. And then 18 is an inside bar. You see 18 and you're long, I would start to get out when you see 19 selling. I could see how people may think this is just a pullback, but there are more bars under the EMA than above. And yesterday ended in a bear leg, so bears could be looking for 3 legs down. Leg 1, deep pullback, leg 2, deep pullback, leg 3. Or if you don't want to look at yesterday's price action, leg 1, pullback, leg 2, second leg trap. Bar 19 is the biggest bear bar, even bigger than these 3 bars. It's about the same as these 3 bars combined, and it has the biggest gap. So gaps get closed in trading ranges. Look at the follow through bar 20. That follow through for the bears, bar 20, 21 breaks out. A reversal is a type of a breakout, so this is a breakout because it's trapping bears, and breakout traps traders and goes in one direction. 22 is that first pullback. We don't have 3 bars in a row, so bears aren't really getting trapped. There's a small gap right here, but then it rallies 23, 24, 25, 26. We do have a gap now. The gap is right around here, but it starts with a bear bar, so it's also, again, it's not the strongest gap. But we know, look at where this gap lines up. It's lining up right around the 19 swing, so we know there's limit order bears trying to get a second leg down from 19, and they get trapped. Bears buy back shorts, bulls buy longs, hoping for a second leg. Leg 1, pull back leg 2, and now that's 2 legs higher. There's that. I think this would be the easiest trade today, but the reversal happened under the EMA, so that makes it. I can see why people would think that's going to happen. If you think 19 is breaking out, it's not breaking out far past this swing low, and then 20 is bad follow through. So if you're short down here, and then you see 20, I would get out and wait for a deeper pullback, and then I don't really trade like this anymore, but back in the day, I could see myself shorting 20, 22. Is that 22? So don't feel bad if you got shredded today. It's a tough day. It's a trading range day, but it takes time to kind of spot. The higher time frame will help you out with that. Bulls got 3 legs up. Leg 1, pull back leg 2, pull back leg 3, pull back leg 4. Again, trading range, it breaks out 38, 39 could follow through. First pullback. Actually, I said this was a good trade, but I do like the context for this trade here, catching this sell-off. I think those were the 2 easier trades today, but even that was difficult because you're going to have to scalp out. It looks like bulls are going to go for the high of the day, and right before they hit that, it reverses down. Then it looks like bears are making a new low, and then it reverses up. So, that's almost an expanding triangle just for a portion of the day. So not only was it a trading range, we did have an expanding triangle in the middle of the day, and then it went to a contracting triangle. Al talks about this a little bit. I think it's called a diamond pattern, but I don't really look at it like that. Expanding triangle, contracting triangle. Bar 38 breaks below the EMA. 39 follow through. There's a small bear gap now, and that gets tested with bar 41. Bulls rally, and then it sells off. That's bar 40. Bar 40 rallies and it sells off. 41, bull bar. Can you guys see the chart better if I don't have the crosshairs? Let me know. 42, small inside bar below the EMA. I think that's an acceptable place to go short, with this being the breakout after 3 pushes up. So you could say trading range. If you're looking at the market cycle, this is a market cycle reset. Trading range behavior breaks out leg 1, pull back leg 2, pull back leg 3. Within this leg 3 down here, 45, leg 1, pull back leg 2, pull back leg 3. That's a fractal leg down. and it rallies again. Bad follow through 48 at new lows. Bulls are buying. I realized I didn't do a mic check, even though I've been testing it all day. That's amazing. I think it's working though. I see the meter going up and down. Bar 48, same context for bar 20. New low, bulls buy it. New low, bulls are buying it, and it starts to rally. 49, bad follow through, but it is follow through. There were sellers above the high of 47, and then trapped, and now they're in a losing position. Bar 50. Bar 51 touches the EMA. There are more sellers at EMA, but then bad follow through 52. Bad follow through for the bad follow through for the Bears. Bar 53 breaks out above the EMA with everything's just bad follow through. Like there's a breakout, but there's a tail above that. There is a bull gap, so we know Bears are now trapped. So, and that leads to a very, very small second leg. Leg 1, pull back leg 2, pull back leg 3. After the third leg on bar 56, we get a deeper pullback. And this, you could even say bar 61 is a better second leg. So leg 1, pull back leg 2, pull back leg 3. Look at 56, 57, all the way through 60. Leg 1, pull back leg 2. Second leg trap again. Second leg traps are very common in trading ranges. And I say that because if you're trading second legs, you got to know the bane of the way you, like, I trade second legs. So when I first was building my system last year, I could not avoid a second leg trap because I thought everything was, going to have continuation. And over time, you start to spot the nuances of what that setup looks like in a bad day. Like today's a bad day for second legs. You wait a long time and you scalp out real quick. And that comes through just following the same setup every single time. So again, I just want to reiterate, if you had a bad day, don't feel bad. Because I remember like having a great month and then one day like this destroys my entire month and I'm in the red. So I'm trying to remember. I just remember how that feels. It's still not that far away from me, not that far back. So just last year. Anyways, 61, nice bull bar. It's climactic, and then we go sideways here. Gets a breakout to the downside, very deep pullback, breaking the high of 67. So we already know that this is not a good breakout bar, 67. But then 71 is the follow through bear bar, trapping bulls right here. There's a gap over those lines, and then we go sideways to up for the rest of the day. I want to talk about the trades. There weren't many trades. I do trade limit orders, and I don't really think the majority of traders do trade limit orders, so I'm going to try and keep it stop order related. I'm going to do both. So I like the bar 2, bar 2 short. I would sit through a lot. I would get filled on 26, sit through like 30 minutes, and then I'd exit on 39. That would be one. That's the first trade, but it happened over here. Another trade I saw, I don't know if I would take this. It really depends on how I'm reading the markets as it's moving. I don't know if I would, but if I had my stop one tick below yesterday's, I might get stopped out. I might not. Sometimes when I'm hesitant on a trade, I'll put my orders like this, and I'll see what happens around here, and I'll try and buy low with my wrist tight so I get a little bit more than 1 R. That's up in the air. I wouldn't recommend taking that trade. That's not the best trade you could take. From a leg 1, leg 2, leg 1, pullback, leg 2. You could short 7. It's a tough trade. You're going to sit through a pullback, and then you got to get out very quickly at the low, or you're going to be in the trade going sideways. Bar 18 is not a bad short either, but it's hard because it's right above the EMA. But if you shorted 18, you're going to catch 19, and you got to scalp out again. So you're going to wait an hour for 1 bar. I don't trade reversals, but for stop orders, bar 20, not a bad buy. We know there are a lot of trap bulls because these bars are rallying, so stop orders are getting filled. You catch that, and now there's 2 legs higher. For me, that's where I would get filled short, right around the trading range highs, and that would work. If you're going to buy the low of 28, be very cautious because this could happen right around here. Sorry about that, guys. Next trade, you see 38, 39. We get a pullback 40, 41. And then right around here is where I would get short for stop orders. For me, let's see if I would catch a trade here. I don't know if I would take this. I don't know. And if I did, I would get filled right around here. Oh, yeah, I would get filled here and exit there. That's not a bad trade. Would I take it? I don't know. The reason I'm saying that is because bears have had 3 legs down and there's 3 fractal legs. Same trade for 48. Bad fall through, 3 legs down. Could buy that. If you're going to buy a reversal, you have to go for 2R. It's a low probability trade. So would you get 2R? I don't know. But you do typically, if you're going for reversals, you're supposed to go for 2R. And you wouldn't get 2R. In trading ranges, it's very common for you to miss your target by a couple ticks or a couple points. 51 starts the second leg up for the bulls, but it's hard because at that point in time, it could look like bears are going to get lower. Again, we're looking at a printed chart, so the conversation is always a little bit different. One trade I do like is buying right around here because I think they got 1R there. I would get filled on 57 and out on 58. So that would be a nice trade. That's what I prefer, 1 or 2 bars within a trade, and then I'm in a winning position. And I wouldn't trade past this because it's coming close to 72 and we're in a tight trading range. So today was a little bit quicker one. My mic's a little messed up. I got to update my TradingView subscription. Guys, I hope you learned something. Please comment how you guys did today. I'm curious. If you want to join the Discord, the invite's in the comments below. You guys have a good one. If you learned something, share the show. And thank you again to all the subscribers and members for tuning in and asking me questions. Have a good night, everyone. Bye.